Hi, everybody. I'm sure everybody's recovering from a wonderful tax season, and therefore dealing with a topic like blockchain, a bit of a lighter topic, I think, than preparing taxes. I want to just kind of cover some of the basic premises of this webinar and highlight some of the points here. I think the main focus of the webinar is not to discuss how the technology works, the ins and out of it, but rather focus on various applications of the technology and use cases where blockchain technology is disrupting traditional business operations. We'll deal with some bigger topic, obviously, this description of what blockchain is, but then further deepen and try and give some examples of its applications. A bit of background about myself. I'm an assurance partner and audit partner at Cohen-Resnick. In that capacity of leading the technology practice nationally, I get to see a lot of, more frequently than in the past, dealing with blockchain-enabled businesses and more questions about a particular use case of blockchain, ICOs, initial coin offerings. But I just want to come out and say it up front. The blockchain space, the technology itself, it's still in infancy. And I do not proclaim to be an expert on the topic other than having more and more experience seeing it out there. And I think in such a rapidly evolving landscape, the learning process and the evolution of the technology is in such rapid pace that my kind of advice is to continuously learn about it, as I believe it will really affect many facets of our business and our clients' businesses. A bit about the firm. For you from the region in New Jersey, obviously should know Cohen-Resnick is a national firm. I think the important thing here is that, again, because of our geographic presence in the Northeast, New Jersey, New York, over the years we have gone not only focused on the technology industry and practice, but really seen some scale with our clients when it comes down to financial technology. And dealing in the fintech world, which I guess with all the buzz out there, does have some very early adopters of blockchain and its implications. So again, because of the scale of the firm and my individual practice, I think the exposure for those kind of technologies becomes more widespread. The last plug for the firm, I promise, we recently published our 2018 Trends for Technology Outlook. Topics like blockchain and ICOs are covered here in a bit more detail. And there's some additional topics such as the activity in the M&A and tax reform is applicable to technology companies dealing with some cybersecurity, etc. So I recommend, if you're interested in what you're hearing, a good light read, you can download that and read it at your time. So delving right in there, I mean, in 2017, there were a lot of stories affecting the technology space. I mean, you have the Uber of the world, the demise of net neutrality when it comes to the communications, the relentless growth of Amazon and expansion and acquisitions. But no doubt, one of the more notable stories is just the unbelievable exponential growth in valuation of Bitcoin. I'm sure many people would just sit around and say, okay, let's see, if I bought Bitcoin, $100 of it to the beginning of 17, I would have, a large number now. I think even more than that, most of us probably know a technology geek that invested in Bitcoin or Ethereum, 2 years ago, and is now, maybe your neighbor is building a new wing on the house based on the crypto craze and the valuation of Bitcoin. I think the overall message, if you look kind of some of the market trends, it's very easy to directly correlate media interest in it to the extreme exponential growth in valuations. And you can see from mid to late 2016, that has really driven up the value of Bitcoin, Ethereum, and all the ICO craze that we're seeing fueled. The reality is, if you really look at the value of cryptocurrencies in totality at the end of 2016 versus 2017, you're looking at over 3,000% growth. There's no other asset class that has performed at these kind of levels. Now, beyond all this craze, and I do think it's somewhat of a craze when you get to these valuations, the real story is the technology underlying the cryptocurrencies, the ICOs, and really much, much more than that. And if 2017 was the year of the cryptocurrency, I think the future ultimately belongs to the technology itself of blockchain or different iterations of it in the form of decentralized ledgers. It will be particularly interesting to see how it evolves because I believe that many of the applications of the technologies have not yet been identified. I draw the analogy of basically think about the internet in the early 90s, mid 90s, and there's just no way that somebody could fathom the far-reaching implication to businesses that we're seeing, a decade and change after. The demise of retail and the rise of online e-commerce could have not been predicted back in the 90s because you just didn't know how the technology is applied. I think blockchain is of that kind of caliber of disruption, and we are just standing on the ground floor when it comes down to its applications. So let's delve right in there. Blockchain, again, I don't aim to give you an explanation of how the technology works, but in pure high-level terms, blockchain is a distributed digital ledger that represents transactions recorded chronologically and publicly. And really what we're talking about is a decentralized ledger. And if all of us on the call have the same copy of the ledger, then we have some more assurance that that ledger is recorded correctly chronologically. There are pros and cons to that. The big pro, if you'd like, is that it is less susceptible to fraud. The ability of manipulating a ledger and really getting collusion among the other ledgers is just less likely. However, a big downside for it is with anything decentralized, it becomes traditionally inefficient, slow. And therefore, as we get through this slide deck, you'll see there's some very specific use cases for blockchain or its alternative, which is a distributed ledger technology. Just not to muddy the water too much, the idea is that a periodic time, for example, in Bitcoin is 10 minutes, Ethereum is 12 minutes. The captured record of a ledger gets disseminated to a community and recorded in all the community. If it's a public record, then it can be verified and acknowledged and constructed on top of each other every 10 minutes. Really, what does blockchain does? It enables potentially untrusted parties to agree on a digital history, on a ledger, cutting out any kind of middleman, any kind of intermediaries. So probably the most common use case that is getting a lot of attention is in fintech and Bitcoin, for example. The technology enables me to transact and transfer digital value without going to the traditional bank, without going to the traditional intermediaries. And having this community-based ledger makes it extremely harder to cheat. You don't have a single failure point that can really throw off the records. However, it is extremely inefficient. It requires a lot of computing power and storage. And without the progression that we had in the computing powers and what we can do today with computer, I don't think this technology could have been enabled historically. As our capabilities grow with certain other technology, this thing comes to light. Another very important point to make here is make the distinction between blockchain, which is the ledger, and the ability of the ledger to be not immutable to changes and fraud, but that doesn't give you any kind of assurance about the underlying asset. the underlying quality of the asset, and whether the information that is being recorded is a valid, real transaction. All it tells you is that when it's recorded, those records are historical, chronological, immutable to change. The real power behind blockchain, not necessarily what it is today, but where it's going to get evolved to. And again, I'm going to go back to the analogies of the mid-90s and kind of looking at the internet. And it's very tough to say to you, if I was sitting in the mid-90s and tell you, I could foreseen the rise of Amazon and Uber, Airbnb, and all these services that were just unfathomable back then. The real power of distinguishing who are the players that are going to rise to the top. Is that going to be the Facebook or MySpace? Is that going to be Google or Excite? I think right now you're at that stage of making bets on potentially very successful disruptive businesses or not so much. I think the real value of blockchain, once it's adopted and begins to accumulate a lot of public records, public data, is the power of artificial intelligence, the ability of computers to search through just tremendous amount of volume of data and records would yield new opportunities for businesses. So kind of keep an open mind, think about it from an innovative, visionary perspective, and try to think about how is this going to affect my clients, my businesses. Before I field some question, and I'm going to give you a lot of examples of how this kind of technology is applied, I do want to show you an example of the different alternatives. That blockchain is not the do-all-be answer for everything. And when you're trying to assess whether it is something that can affect your business and how it's going to apply, you got to ask these three basic questions. One is everybody needs a record of ownership. Does the record need to be public? Do I need a record? If the answer is no, then probably no blockchain. The second question is, do I have a trusted third party to administer the transaction? And, I'll give you the best example I can think of right now is a title on your house. Yes, I need a record of it so I can exchange it and trade it and move it around. Right now, I get to deal with a lot of intermediaries, whether it's my bank or the title company, insurance company, and there's a lot of costs and fees associated with that. If I can rely on those third parties, I don't necessarily have a need for blockchain. But if those parties is what's called untrusted, and it's not necessarily, their potential for fraud there, but untrusted in the sense of I'm not willing to pay the fees. I want to communicate and interact peer-to-peer, without going to an intermediary, then blockchain may be a solution for us. And lastly, the information needs to be encrypted. If there's no need to be encrypted and it just can be, anybody can write and share into a blog, then again, there's no room for blockchain. If you kind of depict it in a different way, it's kind of a decision tree as to whether blockchain could be applicable to you. And I start with, do you need a ledger? Do you need a record? If the answer is no, no need. But let's assume that you do need a record, and there are multiple contributors to that record, multiple writers to it, and I cannot use a third-party administrator for it. So, for example, I can't rely on a bank to transact. I may have room to use blockchain technology. But I think the much more far-reaching application of the technology is a distributed ledger. And really, if there is a third-party trusted administrator, whoever the player is, a bank, for example, and all I need is to be able to share writing capabilities into this agreed-upon ledger, I may not choose to use blockchain. I may use a much more efficient practice of just distributed ledger. everybody within an agreed community, a supply chain, shares or gets a record of the ledger to maintain independently. But the validity of it doesn't require me searching and verifying with all the parties within the community, because I rely on whoever I trust to administrate the community. So kind of like if you look at this on the presentation, it's kind of like sub-segments of the records. On a very basic level, if I am the only writer into a ledger, then a simple ledger is sufficient. I can just live with that solution. Now, if I need to give multiple writing capabilities, for example, different vendors within a supply chain to contribute into this historical chronological list ledger, then I may decide to do a distributed ledger. But if I need, I cannot rely on an administration, orderly administration of those records, then I may want to look into a technology called blockchain. At this point, I figure the best way to do it is to give you some examples, but I'm going to take a quick pause and just get a sense from everybody around the call and see whether you can answer this kind of polling question to give us a sense.
Thanks, Oz. So this is Dave from the NJCPA, and we are at our first polling question here. Are you currently working with companies implementing blockchain or distributed ledger technology? And, not surprising, these responses coming in overwhelmingly on the no side. Oz, do you have any comments about that?
It doesn't surprise me. When you think about the first, it's quite remarkable that vast majority have not interacted with it. Bitcoin was first mined in 2008, but the real rapid kind of like buzz around it is in the last, I'll say 18 months. And where it's becoming, really make the distinction between two things. One, the technology blockchain and how it applies to a business, that's being asked more and more at an executive level, kind of figuring out what is disruptive technology going to do to my business. Similar to how in the 90s, you would have had to say, what is the internet going to look to my business? And the people who said, oh, it's not going to affect me, are kind of left behind a decade later. You can pinpoint to companies like Borders that gave up their online business to Amazon for ebooks back in early 2000 because it represented 2% of their business. 6 years later, it was too late for them, and they were filing for Chapter. So I think the same kind of risks exist if you don't consider what does blockchain mean and what it could mean to your business. Where we've seen the most activity, I would like to say, in the early stage fundraising process, pre-revenue companies, pre-development companies, is the rise of initial coin offerings. And an initial coin offering is underlined by the capabilities of the blockchain technology. And we'll give some of these use cases and hopefully just open the minds as to the people on the call, on the webinar, to begin to think about their businesses and the interaction that they have in the business world and how such a solution of a distributed ledger could affect them.
Sounds good to me.
If you're good, then I'm good. So, how can it impact? Again, looking at some use cases, I think is the best way to approach this. Again, these are the use cases that are out there, but I think the real value is considering what does this kind of technology able to do, to businesses in different formats. And I gave the example of the internet in the 90s. I will make a similar analogy with your smartphone. The first version, the early version of the smartphone, there was no way you could fathom the kind of different application and mobility it's going to give you. And as time progressed, a lot of these opportunities came about. Stuff like Skype or WhatsApp or those communication platforms. Again, if you would have thought about it, you'd be a gazillionaire now. The idea is just facilitate a lively discussion as to the different use cases. And if I was to emphasize one slide from this whole deck, this is it. I think it is, our role as business owners, our role of business advisors to clients, we must ask these questions. How does blockchain, how can I capitalize it for my business? How can it affect my clients? How does it affect the competitive environment? And I'll give some very specific examples. We're an accounting firm. I'm an audit partner. And I got to ask, how does blockchain affect me? And, for a pure audit, an independent verification of the quality of the assets, the digital assets underlying the blockchain, the actual record, I think there is still a need for the audit practice. However, if I can use blockchain for the transmission and the record keeping of giving validity on that asset, cases like SEC consents become obsolete. The concept of the record is immutable. It cannot be changed once I put it up on the blockchain. And therefore, I have assurance that whatever is being looked at is a public record and it's good. Again, that could affect certain product offerings that I have as an accounting firm. How can blockchain affect my clients or, change the competitive environment? The most relevant example I can give now is stuff like Facebook. Facebook recently got dinged for, really giving 80 million records of users out to a private company marketing to do as they please. That's a bit absurd. The intermediary gave away my preferences, my digital preferences, to be able to sell to advertisers. The concept of blockchain and empowering the user to own their digital identity suddenly empowers the user to cut Facebook out of the equation altogether. I can go right to the advertisers and tell them, okay, I'll sell you my information for this particular fee. I can control my information. So again, I guess the first thing that comes to mind in terms of a use case is this user control identities, the digital identity used for advertising preferences. We'll delve a little bit into the medical kind of records, but a user independently publicly verified user identity enables some peer-to-peer transactions to occur without an intermediary in the middle. And where I find probably the most intriguing area of growth in this space is their interaction between the physical world and the digital world. The cross point where I can verify a biometric identity, retina scan, fingerprint, and marrying it up to a blockchain identity preference. I think, that really opens a door for tremendous security when dealing in doing financial transactions, in dealing with some of medical records and ownership of those medical records. So today you go to a service provider, you fill 1 million forms that don't necessarily get secured in a good way, and certainly get shared with, you don't have an ability to control whether it's getting shared with any pharma research type thing. The concept is that I can go on a blockchain first and foremost to verify my doctor's license. There are sites or applications like Hashed Health that allow you to do that. You have companies like Ubase that enable you to aggregate your data and be able to determine who you share it with and when you share it with. So, for example, I may want to be sharing my medical records with research for a non-for-profit and do it for free. But when a research question comes from Big Pharma, I want to charge them. Blockchain enables me to control that medical record and user identity and take control of my preference in distributing that digital information. Let's go back one. The last thing that comes to mind, and I think very relevant, is insurance reimbursement. The ability of an insurance carrier to pretty much real time being able to access what services were provided to me together with my medical records and my coverage could enable payouts on insurance significantly more significantly faster than what we see today and significantly more secured, meaning the risk of having insurance fraud becomes certainly lessened. Another very interesting application of blockchain technology that we're seeing, recently, I guess the test pilot was done in April 2016. Brooklyn Microgrid is a collaboration of Siemens and LO3 that really sets up an alternative microgrid in a local neighborhood to run parallel to the utility grid. And what it does is enable you to sell any kind of excess power, stored power, and sell it to your neighbors. Just imagine how this looks like when you're able to put it on a public marketplace and being able to offer your excess power to the highest bidder. Just think about the kind of applications of what happens as related or parallel technologies like power storage improve. Once batteries are getting improved, you potentially have the ability to have your home generate power while you're away and being able to sell it during seasonality. It's some remarkable applications that I think are going to be very interesting when I find something like the utility models. So that covers some big applications that are ongoing now with blockchain. But I think when you step back and say, you know what, there is a lot more applications for the concept of a distributed ledger. And I may not need to I may not have an untrusted administrator. I may trust the administrator of it, but I still want everybody to have a record of it. And you can see that probably the largest, kind of like the buzz is around financial technologies. Anything from wallets to exchanges, merchant services, various capital market type solutions. But I don't want to give, probably the more exciting part of blockchain and distributed ledger technology goes way beyond fintech. It goes to the application to supply chains, to social browsers, to various identity solution or the Internet of Things sensors. And what I wanted to do is give you a couple of examples of companies that are really underlined by the use of blockchain or distributed ledger for the purpose of their business. First, BitPay is probably the first player out there that enables you to have a wallet to store your Bitcoin and Bitcoin Cash. They raised quite a substantial amount of money when they came about, but because they were first adopters, I think it's noteworthy that they've partnered up with Microsoft and Warner Brothers and PayPal, which certainly gives some credence to market acceptance of utilizing a digital asset, digital currency. Abra is another similar company. I guess the big difference there is that it's not limited to Bitcoin and Bitcoin Cash, but it enables you to trade, buy and store, invest in 20 different cryptocurrencies and growing. So whether it's Ethereum or Ripple or Litecoin, all the various kinds, Abra allows you to do much more than just Bitcoin. Interesting, I'll take a little pause in here because of the first polling question we had is, these two companies, and these are basically marketplaces for trading in cryptocurrencies. Not necessarily, Coinbase is probably well known here in the U.S. Between 2012 when they were founded until today, I think they raised about $250 million from some very reputable institutional investors. They're enabling you today to go into an ATM machine and convert, your Bitcoin wallet, your digital asset, into a real tangible cash like the U.S. dollar. It's just another type of currency. But the limits there, if you'd like, it's very, very much U.S.-centric. Coinify is an interesting venture that is actually backed by the Danish government. as you can see, founded in 2014, raised hundreds of millions of dollars. The concept here is that not only it enables you to have a wallet of various cryptocurrencies and digital currencies, it enables you the ability to convert that into different foreign exchange currencies, like the British pounds or the euro or the US dollars. More than that, it actually enables you to fund your wallet in order to buy Bitcoin or Ethereum or anything like that using credit cards or bank transfers, which is a remarkable kind of thought, because if you come out from the position of, look, this crypto craze is nothing but more than a casino, people betting on commodities, different commodities going in different direction, the lack of regulation on being able to borrow and put it into this casino is quite interesting. And I think, we get to later on in the slides and kind of looking at the regulatory environment, the reality is the regulator just has not caught up to the technology. And certain behaviors that will not necessarily be allowed in the gaming industry or banking industries are still going on in this kind of crypto world. I'm going to take a pause on this slide, because for those of you who have not invested in cryptocurrencies of the sort, my message to you is do not. Research, learn about it. These two marketplaces, exchanges, certainly will enable you to say, I want to invest. So I'm going to take $5,000 and I'm going to spread around all these various coins. This is the platforms in which you're going to be able to do that. Again, I'm not encouraging you in any shape or form to make investments, and this is a very high risk type of investments. However, do consider that this asset class is probably the best performing asset class since the tulip shortages in the 1600s. Again, word to the wise, learn. Just learn about it. The next couple of examples, I take a step back from the financial technology world and look at the application of blockchain down to supply chain, in particularly Internet of Things and identity management. A company called Chronicle is doing some amazing stuff in linking temperature sensors that could exist on your phone, could exist anywhere, and attaching it to a supply chain around food safety and controlled substances like pharmaceutical delivery solutions, where temperature verification throughout the supply chain is being captured through the blockchain, shared publicly, and in case of any disruption or a problem, it is very quick to identify where that problem occurred, and maybe have a recall that's very specific to a batch instead of total recall and trying to figure out days until I figure out what's going on. Chronicle does that for pharma companies and food products. Medichain is another company focused on the medical space and health records and empowering patients to own that record. What's very interesting about them is that they don't charge the patient or the doctor to be on that and share the records. However, they're funded by empowering a patient to share the records with researchers, and research studies facilitate Medichain. Again, just these influx technology continuously puts out there different types of business opportunities, and some of these business models may pan out, actually a large portion of them may pan out as nothing more than a fad, but some may turn out to be the next giants, a la Google and Facebook and Amazon. Similarly, just a couple of more examples, I guess. When an interesting one is a company you hear, Blockstack. It is probably the largest non-financial system using Bitcoin blockchain, just by transaction volume. And it really aims to be a social platform where the user controls the DNS or the key to accessing the network, i.e., when you access a social platform, you truly remain absolutely anonymous. So far-reaching implications into the cybersecurity world and privacy issues. And I would expect, again, that the technologies to defend against that, government regulation and supervision of that is going to evolve probably a bit slower than the technology, but certainly going to catch up at some point. I did want to note Ripple, again, a bit of a financial spin to it, but more of a capital market. Ripple is, I guess, a couple of definitions. First, it is a digital currency. Similar to Bitcoin or Ethereum, it is a type of digital currency. But much more than that, it is actually an open payment network. Effectively, the ability to replace the SWIFT interchange or the ability to transfer money via like Western Union becomes obsolete with the thought of something like Ripple going on. The ability, when you think about governments to sanction other governments, probably by just the threat of removing them from the SWIFT network, goes away if you have really open-sourced networks like Ripple. So the evolution of the technology and how much they get regulated could have a far-reaching implication way beyond the actual business, but to government policy. I think that's a good point to take a stop, Dave, and ask the next polling question.
You got it. So here's poll number 2. Are you personally invested in any cryptocurrencies? And early results show pretty much a similar pattern to our first question, and I know you commented on it earlier. Still overwhelming majority, in the no column here. Any thoughts on that, Oz?
Yeah, again, I think that's probably a word to the wise, and it doesn't surprise me. Accountants by nature are risk averse, and certainly, but I do recommend not to go and invest in these cryptocurrencies, a la Bitcoin, Ethereum, and any kind of ICO, but certainly go back and take a look at the couple of exchanges and the platforms to get a feel as to what it takes to invest in these tokens, if you'd like. Certainly educate yourself. I can't tell you whether cryptocurrencies in the current form is going to be the way of the future, but certainly I think the underlying technology is here to stay, and it's going to revolutionize the way we do things.
Cool, thank you. So we'll close that. Almost 97% said they haven't invested yet, so I guess taking your advice early. The next kind of session, and again, I'm not going to delve into how each cryptocurrency works, but I just want to give a bit of a flavor to the different cryptos and ICOs that are out there, and really the intersection of probably the most prevalent use case for using blockchain, and that's cryptocurrencies. And when you kind of like jump right in there, the most notable cryptocurrencies, the buzz around is Bitcoin and Ethereum. There are two vastly different kind of solutions, but they're both powered by the same technology. And Bitcoin, if I was to just simplify what it is digital money. It is a digital currency that is bought and sold online. There are no bills or actual physical coins. It's not based on another asset like gold, and it is not processed by banks or any kind of intermediaries. However, it's the first example of a purely digital asset that has value. And the other interesting things about it, the first mined Bitcoin was in 2008. Whether the person who mined it or the user announced Satoshi Nakamoto is actually a Japanese guy or it's an alias for another nationality, nobody knows, because that's the advantage and I guess disadvantage of the technology. It's totally anonymous. But Bitcoin is the first decentralized, censor-proof, portable, secure digital asset.
I think what drives its value when you think about it, it's its scarcity. It is limited. When it was originally that the technology was set up, it was set up in a way in which the most Bitcoin that can be in circulation are 21 million Bitcoins. And as you can imagine, with the media craze on Bitcoin, the demand is up there, but the supply is quite fixed. And that's what's driving the value beyond it. Ethereum is vastly different. Ethereum, if you kind of like think about it, Bitcoin is a decentralized ledger for making payments, to transact payments. Ethereum is a decentralized platform to do applications. It's like a decentralized computers for software. The concept is that I can have smart contracts running on the blockchain. Effectively, I could set up an application in which it says, as a business owner, based on the cheapest price of the supplier, go and transact. And Ethereum, the blockchain searches the public records for the cheapest price available to me, and then immediately executes based on the parameter I set for it. Very different than Bitcoin, where a peer-to-peer payment is happening. I could do a lot more than just payments on Ethereum. Again, the technology is fairly young. You're talking about really first launch in mid-2015. Only now you're beginning to see companies really building applications around it. And it's going to continue and just get momentum, I think, as people think it through. Ethereum, unlike Bitcoin, is very scalable. It's not limited by a fixed number of cryptocurrency beyond that. The crypto craze. An ICO, it's a lot of buzz around it. There are over 900 of them in circulation. Most of them are nothing more than, I would say, fraud. But it is, if you were to define cryptocurrency or initial coin offering, it's somewhere between a public offering and crowdfunding. It's when a company sells a token and does so to give utility within a network. I'll give you an example. The NJCPA wants to put together a wonderful webinar on blockchain, but they can't afford paying for it. And what they want to do is raise, similar to a crowdfunding, some cash to fund the technology, to fund speakers or the sort. So they go to all of us, the participants, in advance of the webinar, and say, I'm going to sell you a token. I'm going to sell you a right to access the webinar when I build it. It's not built yet. I haven't done any revenue or hired anybody. But once you fund it, I'll give you a token, and I'll give you a right to use it, a utility. It is a great way to raise funds by offering potential investors an ability to access a network, but without giving any dilution, which is often seen in kind of security trading. If you look at the market for ICOs, between 2014 and 2017, there are over 900 blockchain-based tokens. And like I said, it's $500 billion in market cap related to these companies, most of which, in terms of number-wise, are very early stage, pre-revenue, pre-development concept that would have traditionally had to go to the angel community, to the seed investor community, and probably 99% of them would have gotten thrown out the door and says, yeah, come to me when you have something real. But the concept of blockchain and the media blitz on it has driven valuations so high that today when I advise clients, although I'm not a big fan of the risks associated with ICOs, it is certainly could be a viable alternative to raising money. Certainly cannot be ignored. You have companies like Block One who raised $1 billion in an ICO. some of the companies listed on this page are clients of the firm. Interesting ones in the others category, I'll say, is Rex. They are revolutionizing the way you transact in real estate. The ability to put titles on the blockchain will cut all the intermediaries if this venture is successful. So again, the main message here is that ICOs, individual companies raising these tokens, offerings that don't fall under the umbrella of a security according to the legal documents or the IRS perspective, we'll delve into other regulators, is certainly a viable option. I also found it very interesting that it's not limited to companies. There are countries that, I'll say failing countries in some cases, that are under significant trade embargoes and are beginning to circumvent those by, for example, Venezuela, offering a cryptocurrency backed by its oil token as an alternative to a failing currency. I think if you kind of draw the map and look at the different perspectives of countries, you got in one extreme countries like China that absolutely prohibit ICOs, although in recent months they've come out and said they're looking into developing their own country sovereign ICO as a digital currency. They don't allow companies to do that. You have somewhere in the middle ground, I guess, is the U.S. or South Korea that still figure out what they want to do. And then you got the other extreme countries like Switzerland or Singapore that see this as a great opportunity to enhance their banking sector and are actively putting laws in place to encourage digital currencies instead of the fiat currencies as we see as foreign currencies. I think the main message here is that the crypto craze goes well beyond finance, and it'll be extremely interesting to see how governments and international politics evolve once these kind of currencies are up in circulations. Dave, I think we're up for our last polling question.
This is poll number 3, and it looks like we are getting to about the 10-minute mark, so we'll get this one going quick. If you could just run your answers in quickly. Have you had ICO conversations with clients and prospects? And the pattern seems to be the same. We'll just give people just a few more seconds here, and we can move on to the final section of the presentation.
So the interesting thing here, I think, and I think the trend is overall very similar, is that there are a little bit more people that answered yes. I've had into conversations about ICOs, which basically tells me that maybe the link between that an ICO is powered by a technology called blockchain was not clear beforehand, because I think more people answered that they don't deal with blockchain, but certainly have seen an ICO. So the two things are, an ICO is just an example, a use case of blockchain technology.
Great, and we'll close out this poll, and now we can move on to our final section.
Yeah, so before I really delve into a couple of the high-level benefits and risks involving cryptos and ICOs, I want to take a step back and say, you know what, Oz, give me an example where a blockchain or an ICO in particular could be very, very good. And when I racked my mind initially, I said, the gaming industry, mobile gaming is a good example. I can join in, Candy Crush or Forge of Empires or any of those mobile devices, and I can fund my account with real dollars in exchange for some game tokens. And then I can use those tokens within the application to do various purchases. Think about an ICO in the same manner. Meaning, if I have, for example, a SaaS platform where I don't have an incremental cost of delivering my next unit, I may have a very good use case for an ICO, giving somebody a token, because once I built the platform, it doesn't cost me more to give access to additional users. And therefore, that could be a very good example. Or, a content distribution platform like Netflix, The idea is that once the content is produced, the cost of distributing it may be very low. Therefore, a tokenized type interaction could be very valuable. And in cases where you have to increase shipping, for example, of the next unit, that may not be a good option for an ICO. But on a high level, when you kind of think about the benefits of I'll start with ICOs and then delve into the bigger picture of blockchain. I think first and foremost, ICOs give you access to a larger pool of money in a much faster fashion, where an angel round or a seed round may take a few weeks or months. An ICO can happen very quickly. Going on a blog and creating some, I'll say media blitz on it could get a value behind it. The second point about tokenization of assets, or what really blockchain is, it can increase liquidity by speeding up transaction velocity, creating value that way. Again, I'll give you an example. If I'm a fisherman going out to sea and catching this wonderful tuna, under current without blockchain, I would need to wait until I get back to port, maybe a few weeks later, to monetize it. And when you have a blockchain implemented there, right on the boat, I can have the fisherman monetize it and start leveraging that asset, digital asset at that point, to get some liquidity, to buy supplies so when I get back to shore, buy another fishing boat to go out to sea. So you can see how tokenizing a physical asset into the digital world can create value just by purely enabling a more rapid change of hands. The next point, being a disruptive to traditional capital raising process, you could say it's a benefit or a downside, depending on your perspective. From a perspective of a company, creating an alternative way of raising early stage capital is certainly a benefit. I don't have to go down the route of angels and seed money. From the perspective of those investors, they may need to start thinking about utilizing ICOs as a vehicle for them. However, you got to keep in mind that an ICO is very often not perceived as security. And therefore, on the positive part of it, issuing an ICO doesn't establish any kind of business valuation, doesn't put the risk of a down round at a later stage, especially when you don't have revenue, you don't have a product. It's very tough to put a value on the business. So an ICO enables me to kick the can on it and leave it for a price round in a later stage. Ultimately, when properly issued, implemented, and used, I believe that initial coin offerings and tokenization present a viable alternative to traditional capital rounds. Certainly doesn't have dilutive effects, and you don't have payments. You don't have to necessarily repay it. It's hung it up as a deferred revenue on your balance sheet for all purposes to be recognized when I finally give access to this network. Unlike stock, it doesn't give ownership. You could have some distributions out of it, but it doesn't give you any rights to manage the business. Could be a big benefit to a founder in the early stage that doesn't want to dilute not only its ownership, but management decisions. And I think I'm just going to jump in that second point about capital gain upside. I believe that because of the craze that happened in 2017 and the value of all these, the extreme escalation in value in like Bitcoin, you got companies that went out and did an ICO, raised their individual company token in exchange for Bitcoin in late 2016, haven't spent the money and just sat on it and seen the value of their Bitcoin or Ethereum go by thousands of %, became millionaires in 2017. They haven't built anything. So, that upside opportunity on capital gains is, or losses if you stay in the cryptocurrency, certainly exists. I think now dialing into some of the risk and chime into that, the reality is buyers beware. This is still very early stage of the technology. It is the Wild West. There are no custodians of the assets. There's no insurance of these assets. Many banks are still trying to figure out how to digest transacting in these assets. As such, it carries some very significant risk. I think what's very interesting is that regulators are jumping in. usually slower than the actual technology. But the SEC has come out with a lot of commentary over the last quarter, I would say. First, shutting down the ICO of Arista Bank after they raised $600 million. In the case of Munchies, they put a cease and desist letter in January, basically stopping in the midst of a $15 million ICO, which tells you that they're really attacking anybody in the market from $15 million to $600 million. All the premise, though, is making a distinction whether your ICO is a security or a utility token. What I found fascinating is the chairman of the SEC came out a couple of months ago and basically said, I believe every ICO is a security. And, that's because people are touting them not as a utility token, not just as access to my network, but really saying, oh, this thing is the next Bitcoin. You're going to make a lot of money on the way out. What you got to be aware of as an investor from a tax perspective is that the IRS view of these ICOs is that it's not a security in the company. So if you thought about getting some qualified small business stock benefits on the way out from capital gains exclusions, that usually goes out the door. And therefore, from an investor perspective, the return on investment I have may be significantly lower if I invest in an ICO versus a formal capital round. I think ultimately the advice here is if you're getting involved with it, take precautions. Not only speak to an accountant, but I think very important to speak to a good lawyer, just like every other interaction that you have. Some other regulatory developments, I think it's just important to note that different states lay in a different spot in the spectrum as to how they regulate ICOs. New York, which is the center, I guess, for fintech company in the banking industry, are having bills out there to restrict who can buy and sell and issue them. Will be very interesting to see how it develops if other countries and localities allow you to do that. Another interesting development is Arizona passed law recognizing that electronic signatures maintained on the blockchain are enforceable signatures, effectively making Ethereum a legally binding and enforceable contract. And then you have states like Wyoming that expressly say, look, if you have a utility token, you're not subject to security law. Still not in very diverse from what the SEC chair said. In his opinion, though, most of these ICOs are securities and not utility tokens. I'll get through a little bit faster because we're running out of time, but where's the technology heading? Now, I don't have a crystal ball. If I did, I'll go and invest in Bitcoin 2 years ago and would not be sitting down and instructing this. But I think you do need to consider some of the trends that are affecting the space. First and foremost, if ICOs and cryptocurrencies continue to outperform other asset classes, you're going to get more professional investors and custodians getting involved in the process. You may get hedge funds, VC-backed ICO transactions, and I think we're already seeing some of that. Beyond ICOs, I think the implication of blockchain truly transforming global finances just put out there if Amazon or Apple or Exxon came up with their own token to utilize their network. I mean, those kind of circulated currencies could far surpass any kind of country currency. I think blockchain will enable sooner than most people think autonomous vehicles or smart homes to directly connect to digital wallets, pay for charging, parking, tolls. My refrigerator could order stuff from Amazon to deliver to the house for the door to open to the delivery person. All that stuff is going to be able to do without any kind of intermediaries, peer-to-peer. The question is how fast that happens. And lastly, just planting the seed as the evolution of the technology within the industrial world. First, and I think you're already seeing it, is corporations are pilot testing the implementation of the technology internally, primarily to automate their businesses, to be able to better communicate between different sets of data, and being able to potentially do AI, artificial intelligence, on the data internally. I think as automation kind of progresses, it will evolve into adoption of blockchain of companies with the outside world, with its competitors, with its vendors, suppliers, customers, service providers. And I think as that evolves, you're going to get some standard industry protocol for communications. Again, I don't have a crystal ball to tell you how fast it is, and I think regulation will be certainly going to speed it up or slow it down. But the ultimate goal, I think, the ultimate outcome is the emergence of smart supply chain. The idea that I can automate and minimize waste and process inefficiencies by searching unbelievable amount of data produced by all the players in my ecosystems is the power of blockchain. I think what people have yet to determine is that once you have so much data out there, do we have the computing power in place, the storage power in place to enable the technology to continue and grow? And time will tell on that one. So I know I'm running a little bit late, over a minute, and I'm gonna field a couple of questions if needed. But I do want to encourage anybody who has some bigger questions to reach out via email. I will do my best to respond fairly quickly. And I think in wrapping words, again, I encourage you just to download our Outlook, and you'll see some more pointed article, good short reads around blockchain, ICOs, and even some taste of what tax reform means to technology companies like that.
Thanks, Oz. So with that, it does look like we are at our end time. So I want to thank everyone for attending today's Hot Topics webinar. If you do need to sign off, you are free to do so. I do see a couple questions highlighted, so if you want to stick around, you can do that as well. A couple announcements coming up. We do have many of you are subscribed to the Hot Topics web pass, which happens once a month, like you're used to. So we do have a new one for 2018-19, and that's available online. It's at njcpa.org/webpass, and you'll be getting some email and mail communication on that soon. There is one more Hot Topics webinar coming up for the current year. That's next month, May 17th. And, it's so hot that it might be burning. That's a terrible joke. But we've got what you need to know about cannabis. And judging from the way things are looking, it's something that's coming up. And whether or not you support it, we don't want to steer anyone in their decision-making. But we just want to make you aware of the topics and the situations because you are probably going to get some questions from your clients. I think that's all I have. Thank you for attending. Credit letters will be emailed out. It said 2 weeks, but we'll get them out a little sooner than that. And I think if we have any questions here, we'll stick around for those.
Yeah, Dave, I don't think there's a lot of them, but I'll field a couple. First question I see here is, I think we covered a few examples, but I think a good question, why is blockchain better than cash? I don't think I said that, but there is some things to say about it. First and foremost, the use case of cryptocurrencies versus cash, because the things are much better comparison. The value of cash and the returns you would have to put it on the bank or even in foreign currencies is dwarfed by the valuation of the crypto craze that's ongoing. If you ask me, what's kind of like the big advantage of the underlying technology crypto of blockchain versus transacting in cash, I would just say speed. The ability to have a digital asset or a digital representation of an asset enables you to move it, to share it much faster than shipping a bill or a coin of cash. And where if you wanted to transfer it to another country, for example, you would have to go through an intermediary. In the case of blockchain or a peer-to-peer transaction, I'll be able to do that, cutting the banks altogether in the middle. I thought that was a good question. There's a list of it, and I hope some of these questions were answered through the webinar. Who maintains or administrates a specific blockchain? If you're dealing with Bitcoin, that's it. But I think you can set up decentralized ledger or a blockchain type where in the case of blockchain, the public administrates it. But in the case of a distributed ledgers, we can make a decision as to who we want to administrate it. And that's really up to the supply chain, to the community for it. Is a directory for blockchain? No, there's no directory for the technology itself. There are different communities and different applications of it. but blockchain is the concept, the technology itself. The term blockchain comes from the idea of recording a ledger in a historical, chronological order. And what effectively happens, I'll use Bitcoin as an example. What they do there is every 10 minutes, another block is added to the chain. Another record is added to the ledger. So sequentially. So the idea, that's where it gets the name, that every block gets added to the chain, effectively maintaining an historical ledger over time that is shared by the public, that doesn't require an administrator that's trusted. Because if everybody says that's the record, then it's got to be the record. And there's a good question about successive token issuances being non-dilutive. I think, the advice I gave is engage with a legal advisor that understands the space. Accountants would understand that the devil is in the detail. And when you put a coin offering out there, the rights and obligations that you set up in that legal document would govern whether that token is security, a dilutive instrument, or a utility token. The SEC or the IRS may have a different opinion on that, but the legal document can set it up in a way that the token itself has no dilutive rights. And I think the examples that we have seen with the ICOs over the last few years is that, at least the way the documents are written, they don't give any ownership rights to the investors and don't carry any kind of dilutive obligations. All kind of like the document is, I'll give you a utility token. Where the regulator get all huff and a puff about is to say, when you go out to market that utility token, you're really promising people future valuation to be able to sell that to somebody else for a value, and therefore you're really treating it like a security, and why you're not complying with securities laws. I think that's the question I have in the panel. If there are any other and you want to type it in, I'll welcome to answer that. Otherwise, thank you very much for your time.